In another tweet this morning, President Trump targeted the Federal Reserve, saying, quote, China will be pumping money into their system and probably reducing interest rates. If the Federal Reserve ever did a match, it would be game over. We win. Joining us is Yahoo Finance's Cheung. We're going to call him the referee. Brian, really? Would we win?
Yeah, so let's break this down. Basically, what Trump is saying is that the tariffs should, in theory, push China to lower its interest rates and also make for monetary policy an easier condition that would basically allow the country to deal with the tariffs of $200 billion of goods that it's already facing and potentially the other $300 billion of goods that the Trump administration is now threatening. And his argument is that the Federal Reserve on the U.S. side should also lower its rates to deal with any sort of retaliatory tariffs that China might be putting in place to basically accommodate the U.S. economy as well. And he argues that if the Federal Reserve does do that, then it'll be able to win the trade war. So Trump trying to enlist the Fed effectively to join him in this war against China, saying that the Fed is really the key to winning all of this. So this is kind of probably one way for him to probably assign blame to the Federal Reserve if there were to be some sort of exacerbation of the current situation that could materially impact the U.S. economy through some of the data that we might see in the coming months if it does extend that long. But this gets to the general point of what is the actual impact of the tariff going to be on the U.S. economy. Obviously, we need to wait to see, but some Fed officials have already spoken about it. Eric Rosengren, the head of the Boston Fed, who is a voting member of the FOMC, actually said yesterday that he could actually see a case for a rate hike a rate cut if conditions get worse. He didn't say that he sees it as the case at the time being, but says that it is on the table. And New York Fed's John Williams actually today in Switzerland in an interview with Bloomberg saying that he could see the tariffs having a negative impact on U.S. economic growth, but did not speak specifically to the idea of a rate cut.
All right, we want to bring this to the panel, and let's bring up the fact that the president has pressured the Federal Reserve, at least tried to pressure the Federal Reserve to cut rates. They don't seem to be listening, but there are analysts who say they goofed when they raised rates last year.
Yeah, and I was going to speak about this later. I can mention it now. A lot of the money managers that I speak with, Adam, talk about how, at very least, the Fed needs to undo that December rate hike. It was based on stale data. It should not have happened. It's thrown the yield curve into some turmoil. Maybe they need to pull it back. But how about here and now? Never mind that. One other thing that John Williams said overnight that isn't getting attention here is that he did mention that fiscal policy could help increase global resilience. To me, that's a message from the Fed saying maybe there's something to be done here. Let's not forget that a couple of weeks ago, amidst all the noise, Donald Trump had a very good meeting with Chuck Schumer and Nancy Pelosi. They talked about $2 trillion of infrastructure spending. It would not surprise me to hear both parties come back and start talking about that again.
Don't hold your breath.
Yeah, I mean, but where's that?
Hold my breath.
Well, the question remains: where's that money coming from? But
Well, the bond market doesn't seem too concerned about debt levels. And the GOP has a choice here. They can start complaining about debt levels, or they can be the guys going into 2020 who said no to infrastructure spending. Everyone likes roads and bridges. No one likes higher taxes. But getting past the debt ceiling and letting the bond market and letting debt grow, no one seems to have a problem with that right now. I don't see why they're going to stand in the way. I know they're supposed to stand in the way.
We could go back to the Fed for a second. I mean, what we're talking about here is loony. Let's just be, I just want to be clear about this. So you can argue whether the Fed went a little too far last year. That's one thing, but relating this now to Trump's trade war is something totally different. So the sort of emerging argument here, and it really just comes out of a Trump tweet, but now everybody's talking about it, is if Trump messes up the economy enough to slow growth through his trade war, then the Fed would intervene by lowering rates to counteract what Trump has just done to damage the economy. That's crazy.
He doesn't fix it.
Now, that's crazy.
He doesn't fix it.
The emperor has no clothes.
Well, also saying that the U.S. should do what China does when it comes to the amount of stimulus that China, that China pumps. I mean, that's another.
It's loony. It's just loony. I mean, this is in no textbook anywhere.
No, a lot of.
It's not. Yeah, it's not.
That's probably why Trump thinks it's great.
To be fair, what I talked about, the undoing that rate cut came before we had this recent bout of everything. It was more about getting things more back to normal in terms of the yield curve and everything else. For him to say, if, then we win. Yeah.
If I mess up the economy enough, that growth slows, the Fed can then cut rates and we'll all be happy.
Come in and save me.
What?
All right, we got to put a pin in this and get micro for a minute. We'll talk about this more later.